Hello, I'm Doug Jones at Mortgage Magic, and I've become to specialize in reverse mortgages. Wasn't always that way, but then as I got older and I had more older customers and kind of fell into it and started loving the loan. And one of the complaints I've heard about the reverse mortgage is that it eats people's equity. I've heard things like, you're going to give your house to the bank and you'll have no equity. And you know, that's just not true. And sad to say, a lot of those comments sometimes come from the kids. Kids are expecting a large amount of money from at the time of death, and then they think, oh, I'm not going to get this money. And it's really sad to say, but I tell you, I actually hear that. And I want to show you something in the Bay Area, and I'm talking about the Bay Area, where values are a lot. There's a good chance you will increase your equity position. Even if you get a reverse mortgage, there's a good chance you'll increase your equity position. I'm working on 2 loans right now, and one of the papers we give customers is called an amortization schedule. And this amortization schedule, you can see it's quite detailed. You can't see it on camera, but it's quite detailed. And it shows the value of the house going in. It shows the loan balance. It shows the interest rate. It shows the projected projected rate, inflation rate, appreciation rate of the house over the next few years. And right now we're using 4%. In this example, after the loan, this customer has $900,000 equity. $900,000 equity. The house is worth $1,144,000. The loan is $242,000. But in 5 years, that same customer now has $1,028,000 equity. And in 10 years, they have $1,209,000 equity. So even as the reverse mortgage is growing, in 10 years, the balance is $418,000. So it's growing because there's no payments, and there's interest, and it's accruing. Even so, it's growing on the other side as well. And this customer picks up, if the economy stays the same and things continue doing the way they're doing, they'll pick up $300,000 over the next 10 years. Here's a customer who has a different motivation. This fellow wants to sell his house in 3 to 5 years and move up to Reno. And his house right now is worth about $860,000. We'll get him a loan, starts at $276,000. So he has in equity $604,000 immediately. From the time you take his value minus the loan balance, he's got $604,000. In 3 years, that grows to $638,000. And in 5 years, it goes to $651,000. So my point is, heirs don't have to worry that, especially in the Bay Area, they don't have to worry that the equity is going to be eaten up, there's nothing there. Because if we keep with appreciation of 4%, there's going to be equity, it's still going to grow, and the parent, the person living in the house, gets the freedom, they get the relief of not having to make mortgage payments and having some cash, and knowing that they can still, if it's important to them, leave a lot of money to their heirs. So don't be afraid and don't believe when you hear that the bank's going to take it, there'll be no equity. Get the facts. And if you want to get the facts, call me. I'm Doug Jones at Mortgage Magic. My phone number is 408-209-6773. I'm in San Jose. I work all of California. But I'll be glad to print one of these out for you and show you the real numbers and what it will look like for you.